Ladies and gentlemen, hello, good morning, and welcome to the Elite Traders Group update for the last day of the month, 30th of November 2011. My name is Matt Dibb. We're going to go through a couple of markets as to see what happened in the price action last night for a few of these. We do have a couple of opportunities also to look at. Let's kick it off firstly with the Dow Jones cash chart index. As we can see, there's actually quite a bit of optimism last night. It was looking good for a number of hours. Consumer confidence came out better than expected, a reading over 50, in which we saw the equities markets rise quite a bit off that. Now, we can see that we actually found quite a bit of downside in the last hour or two of trade, and in particular the open of the Asian session. Simply because S&P came out and downgraded all of 37 banks. This does include Goldman's, Bank of America, Citigroup, Morgan Stanley, and many more. Now, that's a bit of a blow to the equities market's performance for last night, and unfortunately the good reading coming out of consumer confidence. But nonetheless, I think it might only be a short-term pullback in the scheme of things, leading up to our non-farm payrolls on Friday night with 120,000 new jobs expected. I think we're going to see a bit more of a rally coming out of there as well. So Dow Jones still looking good for the time being. It's made quite a bit of headway of about 300 points now. We expect a further break to the upside prior to Friday, and should that jobs figure come out, I think we at expectation, I should say, I think we're going to see a further break of around that 11,600 mark, so looking quite good. Now moving on, what are we trading at the moment? Not too much of equities markets right now. What we are looking at though is short US dollar plays. Now, yesterday we took profit within our Euro Australian dollar. Did we take this a tad bit too early? Possibly. In hindsight, I think we may have, but nonetheless, it's very hard to pick the bottom of markets at the moment. We entered this at 1.37 up here as a put option. We took profit yesterday at around 134.5, so just around here. Still about 140%, 150% profit there, but after last night we saw a severe sell-off in the euro across the Australian dollar. So hindsight would tell us we should have held, but even so. Moving on, we took out a call option yesterday. We've been playing with a few options lately. A call option on the Kiwi across the US dollar. Now this is actually looking quite nice. We're looking for a bit of a turnaround in the US dollar, especially if we see this risk-on scenario where equities markets are going up, especially coming into Friday in non-farm payrolls. If we see strength in US equities, I think we're going to see the greenback sell off a bit as we go into that risk-on period, and as a result we should see appreciation in a lot of the major currencies across the US dollar, in particular the Kiwi. Now what we did yesterday is we took at the money call options at 75.75, cost us about 90 pips for that one. Right now they're trading at about 125 pips with the market price at 76.28. So we are in profit about 35-40 pips or so already. We're looking for a target in this one of around 77.50, in which that should bring our option premium up quite substantially. So looking like a really good trade. We've got an expiry on that one through till the 9th of December, which would be next Friday. So quite a bit of time. We're in the money now, and we'll be looking for some further strength within the Kiwi to the US dollar. Now, what else can we go over? Other movers that we saw last night would be crude oil. And crude oil, the situation with the sanctions from the UK and Iran is really thrown a bit of a spanner in the mix. So I think that the strength that we're seeing within the crude oil market right now is very interesting, considering that we're seeing so much volatility within equities markets. So that correlation which was once there, S&P up, crude up, or S&P down, crude down, has somewhat changed, and we're now seeing people focus more so on the supply issue. Now, there was rumours previously that there's going to be a reversal in the Seaway pipeline so that we see more oil flooding into the Gulf, and as a result, that shot it past 100, which is up here. Now, as of late, those rumours have cooled down. That reversal rumour has cooled down, and we aren't seeing as much upside, but it is knocking its head on this 100 mark, which, as we say in the industry, is called rounditis, that fear of round psychological numbers. So we'll be keenly watching this one, looking for a break. You can really be looking at a break of 100.3. With a stop loss, you'd be looking still at 97.3. I would be inclined to have that a tad bit tighter and look to move up stops with a trailing stop and step to snap that into break even as soon as possible. So we'll be looking at that for a recommendation. Lastly, guys, would be the gold euro that we're currently looking at. And the gold euro is looking nice. I'd rather spot gold across the euro rather than the US dollar, simply because it's less volatility. We can see the consolidation there at 12.92 as a breakout. I'll be looking at stop losses of about 12.75. So you're only looking at about 20 points there, and we'll be looking at establishing that position over the next 48 hours. Alright. Excellent, guys. Thanks very much for listening. If you do have any questions whatsoever, please refer to the website. As we can see, if you're interested in live trade recommendations, discount full service broking, as well as some of the lowest margin requirements in Australia, please contact us to subscribe. Number and email down the bottom, or just hit the subscription on the channel. Thanks very much for your time. Enjoy. We'll check in tomorrow. Cheers.